everyone, welcome back to our first video in 2020. For those of you who aren't familiar, my name is Christina Steeren and I'm with Bullseye Investments, where we help busy professionals create a better financial future through apartment investing without the huge time commitment. And today I wanted to take a chance to kind of share my reflections from 2021 with you, because looking back over the year as a whole, there are some things that kind of stood out to me. And I think they're going to be really helpful for you as an investor to know some of these things. I've got five or six things that I want to share with you today. So Bullseye Investments in this past year has been involved in 3 deals in 3 different markets, 2 of which were brand new markets for us. And so we acquired 410 new units that we added to our portfolio, which brings our current portfolio to over 2,500. So we've seen a lot of growth. And as I'm sure you know, a lot of the opportunities that we invest in are value add. So with things opening up after COVID, there are some things we learned specific to that whole value add process. So let's go ahead and dive in. So lesson number 1, the impacts from COVID are still being felt across the board, from rental assistance still being needed, to supply chain issues, to renovations being delayed for a variety of issues, kind of all stemming from that shutdown with COVID. Although things are up and running, they're definitely not back to normal. Lesson number 2. The biggest issue that we saw across all of our properties with our renovations, because we are involved in a lot of value add opportunities, has been labor shortages. We have the space, we have the ability to pay, but there just aren't enough people working in the industry, specific to what we need done. And so we're seeing a lot of huge time delays with being able to get labor, or we're seeing people apply for positions and not show up to the interviews for whatever reason that might be. So labor has definitely been the biggest impact on our investments this past year. Number 3, supply chain issues. We felt this too. I know it was on the national news that there were all of these boats out in the ocean with these just tons of goods on them, and they just couldn't get them to where they needed to get them. They couldn't get them into port unloaded and everything trucked to wherever it needed to be this past year. And we felt those effects too, whether it was a certain paint color that was unavailable or a type of flooring that we couldn't get. We definitely had to be able to be flexible with our renovation plans to make adjustments when product was out of stock. Something else we noticed with some of our larger renovations, things like playgrounds or other materials were back ordered 6, 8, 10 months. And then if you throw in the issues with labor shortages and laborers being backed up, you have a project that in the past might have taken 2 or 3 months, taking almost a year. It's been crazy. But it is the reality of how things have gone this past year. I'm sure it'll continue a little bit into 2022, but we're crossing our fingers that we're past the worst of it. Number 4, evictions have changed. And a lot of places you can't evict. We're very lucky that for most of our properties, we're in areas where evictions are taking place. And while this is the absolute last step anyone ever wants to take, is to evict a tenant, for those tenants who did not apply for rental assistance and have not been paying their rent, and we've tried to work with them and been unable to, for whatever reason, that we've needed to file an eviction on them, we're seeing a much, much, much greater turnaround time in being able to evict someone. So in some of the areas we have properties at, the eviction time in the past might have been, a couple of weeks to a month. And now we're looking at multiple months down the line because the courts themselves are so backed up. Which, like I said, eviction's always the last step. You try and work with the residents and help them apply for some of that rental assistance, or work with them on, say, a payment plan. But if you're unable to come to some terms and they're still not paying their rent, or if for some reason, for a safety issue, they need to be evicted for the rest of the community, because sometimes that has occurred, there's just this huge backlog and it's taking a really long time for people to be evicted. Number 5, a lot of people are looking at how well apartments did for apartment owners during the pandemic. And so a lot of people are looking for apartments to invest in, which means there's a huge amount of competition for opportunities that are available. What this means is the really, really good deals in some markets are going for significantly higher than even the brokers expected them to. We were looking at a property that we expected to be between, say, $8 and $10 million, and the top bidders were upwards of more than $13 million. So that's a huge difference, right? $5 million difference from what the broker expected to where the property was actually bought. So that means that we are being still very particular about what opportunities we look at. But it means that we have had less opportunities come our way, right? We've had less properties under contract than in the past because of that huge amount of infusion of people who are wanting to get into apartment investing. Number 6. All right, my last lesson learned. Number 6, you as an investor, patience is key. Things opened up and we were post-COVID, but even post-COVID, we've still seen COVID surges and we've seen things fluctuate. And as an investor, that's really hard when you're expecting to start maybe receiving distributions from one of your investments and they're delayed. But that's also why finding a syndicator who is focused on capital preservation, on not losing your initial investment, is so important, because they have very conservative underwriting. And while you may see that delay, at least you will be paid eventually, right? Things are delayed. And as they get things back on track, they'll return to normal and you'll be able to see those normal distributions. I can only imagine a syndicator who doesn't have a focus on capital preservation and how difficult this past year might have been for them, especially with some of the delays that we saw. If they're seeing them and they're not as conservative in their underwriting, that could have really, really hit their bottom line hard. So as an investor, you really need to kind of prepare yourself to not really expect cash flow, especially in a value add investment, for a little while, because it might end up taking so much longer than anticipated because of things like labor shortages and supply shortages, something that your syndicator can look for somewhat, but it still may be a larger toll than they were anticipating when something crazy like COVID happens and the world basically shuts down. It takes a little bit of time to get back on track. So I hope that was really helpful and that you gleaned at least one new little tidbit of information from the lessons that we learned in 2021. Feel free to go ahead and drop your favorite lesson learned down in the comment section below. Hit the subscribe button if you want to be the first to know about any new content we drop, and like this video to let other investors know that you found this content helpful. If you're ready to take the plunge and join our investor group, head on over to bullseye-investments.com and fill out an application for the Bullseye Winner Circle. And I really look forward to helping you out in the future. Let us know any questions that you might have so that we can answer them in a future video. Have a great day. Bye, you guys. And of course, we're not going to lower our standards. We keep our same high standards. So it is what it is.